Exchange-traded funds, or ETFs, have been very popular among SMSF investors, but this has mostly been in terms of products covering a single asset class. James Kingston from BlackRock is here today to discuss the benefits of a multi-asset ETF. Welcome, James.
Thanks for having me.
Look, we might just start right at the beginning. What actually is a multi-asset ETF?
Well, it's essentially doing exactly what it says on the tin. So I think most of us, when we invest, we're very familiar with investing into shares. So we'll go into the ASX and we'll trade the securities and the stocks that we want to build for our portfolio. There's a lot more types of investments that we can buy out there. So, for example, fixed income or bonds are the other major asset class that we'd be using within a multi-asset portfolio. What a multi-asset ETF does is combine those different asset classes into one product. So instead of an investor having to go and choose how much Australian equities they buy versus how much of international shares, or how much equities to buy versus how many bonds, a multi-asset ETF builds up all into one product for the investor managed by the asset manager. So in the case of BlackRock, the multi-asset ETFs that we have, we control that asset allocation and we'll decide how much of those different asset classes to buy to create the best risk-adjusted return for the clients that they invest.
Okay, so how many asset classes can actually be covered by one multi-asset ETF? Is there a limit?
Well, I mean, typically to build the most basic multi-asset portfolio, you'd think about buying domestic equities, international equities, domestic bonds, international bonds, and cash. So those 5 asset classes are typically the most common asset classes you would need to build a diversified portfolio. And indeed, those are the 5 that we wrap up into our multi-asset ETFs, iBow and iGrow. To give you an idea, one portfolio gives you access to around 7,000 securities across equities and bonds. So really impressive diversification across multiple asset classes. And then if you look at, for example, a growth multi-asset ETF, so iGrow, 90% equity, 10% bonds, built for a longer term investor. And then if you look at the equity portion of that product, around 56% of the equities in international equities and the rest will be in domestic equities. So again, we're always thinking about whether we should be allocating more towards international versus domestic and thinking about the asset allocation.
So can an investor use a multi-asset ETF instead of trying to cobble together several single asset ETFs in their portfolio?
Yes, absolutely. I mean, if an investor doesn't want to focus on the research about how much to invest in international versus domestic or equity versus bonds, for example, then a multi-asset ETF will do that for you. And many investors will use this as a single product. So they'll buy the multi-asset ETF and that is their whole portfolio. Other investors will use that at the core of their portfolio, and they might still have their own ideas around individual stocks to buy, either domestically or internationally. So essentially you can use it as a core holding and then still trade some of the stock picks that you may have or like, as you may have done before. So you've got the benefit of diversification, knowing that the asset allocation is being managed by a professional asset manager, but you can still impart your own views and your own ideas.
Right. Would you say that they're a more efficient investment tool in those terms then?
It depends. If you love asset allocation, you love building portfolios, then you might want to take the time to construct your portfolio and think about, how much you're investing into each of those asset classes. If you're more interested in stock picking, then maybe you leave the asset allocation to someone else and use one of these ETFs. In which case, gaining access to 7,000 securities in one efficient trade is far more efficient than buying 7,000 individual securities, which nobody's ever going to do. And in terms of kind of cost that you're kind of paying, typically on our products, it's around 22 basis points. So you get access to a global portfolio of securities for just 22 basis points. So in terms of efficiency, you've got cost efficiency, you've got trade efficiency, you've got minimized transaction costs because you're just buying one product rather than many. But you still have the ability to kind of marry that up with other investments if you want to express a view or, again, use your own ideas in the portfolio.
And when you look at risk, does risk profile or risk appetite come into the equation as to whether or not an investor is appropriate to use a multi-asset ETF?
Look, risk is very, very important when it comes to portfolio construction. So for clients who have got a higher risk appetite or have got a longer term horizon, they're usually more willing to take more risk in their portfolios. So when you think about multi-asset investing, that means that type of investor will be heavily invested in growth, so equities, and less invested in defensive asset classes like bonds. When somebody with a shorter term horizon or less risk appetite will typically be invested into less growth assets, less equities, and more bonds. Now, you can't build a portfolio for every single type of investor, but we can create what we call risk profiles. So a balanced portfolio is approximately 50% equity, 50% fixed income. So for example, IBAL, our balanced ETF, or a growth type portfolio is between 80 and 90% growth assets and the rest being defensive assets. So that kind of caters towards somebody who's more defensive, so using IBAL, or more growth orientated, using iGrow. For people who are in between, you can buy both products and just weight them. So if you wanted to get 70% in your equity allocation and 30% in your bonds, you just combine IBAL and iGrow in the right proportions to give you the asset class mix that you're comfortable with and the risk that you're comfortable with.
Okay, well, you mentioned a little bit earlier about the core satellite investment approach, and a lot of people like that when they use ETFs. Does the multi-asset class and diversification characteristic of a multi-asset ETF make that strategy a little bit more challenging?
No, I don't believe so. I mean, I think you can use a multi-asset ETF at the core of your portfolio, which gives you the multi-asset diversified, more risk-focused investment. And then you can pick your own individual ideas around them. Now, the important consideration is if you start off with, if you say you're a fairly conservative investor, so you want 50% equities, 50% bonds, you buy IBAL, which is 50-50 equity bonds. And then you start buying more equities because you like certain picks. So you might pick some ASX securities to go on top of that. When you do that, you're going to create more growth in your portfolio. So you're actually going to go from 50-50 to having more equities overall. If you want to maintain that asset allocation, you need to combine those satellites with a fixed income satellite to ensure that you maintain the same level of diversification as the multi-asset ETF. If, on the other hand, you want to be 70-30 or 80-20, you can start off with an IBAL, so a balanced portfolio, and then add your equities until you hit that risk profile that you're happy with. So the one thing that I'd say with that is always be cognizant of your overall asset allocation and your overall mix of assets within your whole portfolio if you're starting off at the core with a multi-asset product.
Well, they were great insights, James. Thank you very much for the discussion today.
Thank you for having me.